A very good morning to my YouTube family. Hope everyone is doing fantastic on this beautiful day here in the Netherlands. The sun is, I think, shining. So a very good morning to you all. Hope you guys are all doing fantastic. Some very interesting price action yesterday. Personally took a Swiss yen short with the VIP community, banked approximately 70 pips, close to 2% on that trade. So yeah, very good trading day for me personally yesterday. And without further ado, let's have a look at what the market is going to present us with today. Okay, family, let's have a look at the dollar index. So the dollar index, first of all, has been rising up. As you guys could probably see, we didn't hit that area of demand, which I mentioned yesterday. However, what we did see was a beautiful fake out on the low of 95.422. So very clear liquidation. And at times, this can signify that there is a lot of demand underneath that low. And price does not always need to tap in towards this area of demand once we've seen a fake out on the low / liquidation. So very clean price action back up in towards the highs, currently stalling again in this area of supply. Currently retracing back downwards. So it seems like the dollar index is now in consolidation because we can't really break this high. So it is a possibility for us to push down a little bit lower. Inside this bullish or bearish candle over here, there is also some demand. So let's see if we can tap into demand over there and then see further price action and start moving a little bit higher in towards these wicks of 4-hour supply. Because as you guys know, the more times we tap in towards an area of supply, the weaker it's going to get. So this area of supply over here is getting weaker and weaker by the week. So let's see if we can break it. Very curious to see what today's price action is going to be giving us. So yep, that's that for the dollar index. Let's head over to Aussie dollar. So Aussie dollar, looking at Aussie dollar at the moment, what we can see is that yesterday's outlook essentially played out beautifully because we were anticipating on a higher push in towards supply, the higher probability zone to look for shorts. And as we can clearly see, price then dumped. So a lot of people may be asking, well, heard the 4-hour was bullish from, let's say, this low to this high, or from this low, as I have marked it out personally, to this high. And we're coming from demand, so we're trading with a trend up, right? So why isn't the market moving up higher? That's the question every trader is asking himself. However, if we look at the higher time frame, and the higher time frame always takes precedence over the lower time frame, what we can then very clearly see is that if you were to draw in this doji candle from wick to wick, this is kind of daily supply. It's not very significant because it hasn't taken out any low whatsoever. However, if you look inside that daily area of supply, you'll then find 4-hour supply. So yeah, that is pretty much it on why it dumped. But then as well, if you look at the higher time frame, and I've mentioned this during the week, of course, we had a weekly break of structure towards the downside, a daily break of structure towards the downside, and of course ascending price action. And we've hit the EQ, the 50% mark of the bearish range on the daily, alongside liquidation over here. So yeah, just so much confluence for a further downside push. So I'm really happy to see that that played out. I know some of you guys took a short and sent it to me. Congrats if you did take it. Simple buy or sell limit, on the zone targeting back down towards lows. You would be at its peak 3.28% in profit. So yeah, some really clean price action. So what do I expect next for Aussie dollar? Well, I am kind of anticipating on the fact that this area of demand is going to get run. Of course, this demand chain over here, these three zones, is still intact. However, as you guys know, the more times we tap in towards an area of demand, the weaker it's going to get. So we're already in demand for the second time. And looking at the other dollar pairs as well, I do personally find it very logical if we were to run this zone and create a new lower low. So yeah, that is that for Aussie dollar. Let's head over to our next pair, which is Euro dollar. And Euro dollar, very interesting price action. As I mentioned in yesterday's video, I wasn't really convinced, or at least I called this in the VIP community. I'm not sure if I mentioned it in yesterday's video, but I think I did, because what we've been seeing on Euro dollar is, of course, a tap in towards this extreme area of 4-hour demand stacked with daily demand. However, as we can see, the reaction was just so weak out of that area of demand that I wasn't really fully convinced that we were going to see a push up higher. Most of the times when you come in towards an area of demand, you want to kind of see a V-shaped reaction, notifying that there is a very strong area of, let's say, demand or supply. And in this case, we just chop, and then fell down lower, which for me is just, it's very clear price action, because of the fact that if there was really a lot of demand inside of this 4-hour zone, we would have really seen a stronger reaction back up. So very nice to see now that this area of demand has broken. It means that the lower time frame is also bearish now. So let's have a look at the 15 real quick. And I'm just going to be kind of keeping my eye out for 15 minutes areas of supply. Currently we are reacting to this area of supply, this bullish candle over here, but we could still move up higher and react to this area of supply and still remain bearish. So let's see, guys. I'm pretty curious to see if euro dollar can start pushing down lower, because this demand zone is now invalid, let me put it that way, and this is now essentially our new area of 4-hour demand, this bullish candle over here, because this bullish candle took out this low. Of course it's not massive strong, because it didn't really take out this, let's say, break of structure, but still we can expect a decent reaction, especially kind of with this bearish momentum in towards the downside. And once again, just the same as on Aussie dollar, overall bearish order flow on the higher time frame. So that is that for euro dollar. By the way, as well, this area of demand on the daily is now not valid anymore. And of course then you have this area of demand, but this demand area is also not fresh. So that's why I'm not really fully convinced that we're going to see more upside. However, just keep in mind we're now in a choppy range, so anything can happen inside that choppy range. Hence why I'm not a real big fan of euro dollar myself, because if we look to our left, just a lot of mess, and most of the times when you come into mess, price action is also going to be messy, let me put it that way. So I'm just keeping that in mind when looking at euro dollar, but for now it does look good for further downside in my opinion. So let's head over to pound dollar. And pound dollar, as expected, moving down lower from this area of supply over here. I think personally it's going to take out this 4-hour area of demand and possibly also this daily, in line with the overall daily trend in towards the downside, as I've been calling all week essentially. So I hope some of you were able to profit from this. I did call out this area of supply. I was preferring, let me put it this way, this area of supply to then liquidate stops above this high, but it is what it is. Reacted to this one, very nice price action. Some of the guys in the VIP community were able to take a short, so big props to them. Great trading. And now let's see what's going to be happening. I think personally that we're going to see some further downside for now on pound dollar. So let's head over to our next pair, which is Kiwi dollar. And Kiwi dollar, as expected, broke this area of demand, and this is just a very clear explanation of the more time you spend inside an area of demand, the more likely you are to break through it. I think it was from this candle that I was kind of talking about for the downside. As we can clearly see, we came into supply one more time and then dumped. Really beautiful. So the 4-hour is now confirmed bearish, as we've now had a 4-hour break of structure of this low over here. So this is now your swing high at the top. And now what do we expect after a 4-hour break of structure? At a certain point in time, we expect a pullback. So let's see where the pullback is going to be coming from. Just keeping my eye out for, let's say, these areas of demand. Other areas of 4-hour demand is just super far away, so I'm not really going to be interested in that, but I'm just keeping in mind that we could still see just a bit of a further dump before, let's say, pullback and then downside continuation. But for now, really nice to see Kiwi dollar tanking down lower as anticipated. So let's head over to our last pair, which is gold. And gold, guys, as last. So gold has been inside this area of supply beautifully, reacting to it, as I've been mentioning for the past 2 days. Looking at the 4-hour time frame, we can see a real slowdown. A lot of people are currently looking at a head and shoulders pattern. For me, I'm not really interested in that. I haven't really been trading gold that much because of the fact that we saw this consolidation range. And remember what I said, like it could just fake out and then move up higher. So really wait for a confirmed break on the lower time frame. Didn't really happen at all. So for me personally, it's still just consolidating. Now just a little bit higher with this high. Of course, it does seem like a head and shoulders pattern, but for this to be any kind of valid trade, personally, I would still want to see a higher retracement in towards, let's say, this bullish candle before looking for shorts. For me, it's just not really high probability of selling over here. So just keep in mind, we could still see a fake out on, for instance, this low over here at 1836, and then just take out stops once again and then reverse back up. Trading gold at the moment is just very dangerous, so just keep that in mind when you're looking at this chart. Furthermore, if we were to push up higher, just keep in mind that this is the next kind of area of resistance. These candles over here at around 1860. That's pretty much it. to be honest, guys, if we see a pullback on gold, which is still pretty preferable, just keep in mind 1825 is approximately the pullback zone from where we want to be start looking for longs. So yeah, that is it. Thank you so much for tuning in. I wish you all a fantastic day. And if you have any questions, as per usual, just feel free to join the free Discord. Link is in the description down below. And I wish you all a fantastic day. Thanks, guys.